Have you ever looked at a cryptocurrency chart, seen a token falling in a straight line with sell signals flashing everywhere, and yet heard a group of passionate traders claiming it is completely undervalued? It makes you wonder if they see a diamond in the rough or if they are just trapped in a sinking ship. Today we are diving deep into one specific asset that is causing exactly this kind of intense debate in the crypto community. We are looking at BUU, a token operating under BNB Smart Chain under the official web domain buu-bsc.lol, currently sitting at a ranking of around number 4008 on global tracking indexes. It has recently experienced a major 24-hour price shift of over 12%, with its trading value sitting around fractions of a cent at $0.0001661. The community is completely split. Is this a golden entry point for an explosive recovery? Or is it a classic value trap designed to drain your wallet? Before we break down the charts, the momentum indicators, and the underlying risk of this high volatility token, make sure you hit the like button right now, subscribe to the channel, and it is absolutely compulsory that you leave a comment below telling me if you are holding BUU or if you wouldn't touch it with a 10-foot pole. Your interactions keep this channel alive, so leave that comment right now. To understand why BUU is causing such a massive stir right now, we have to look at what this crypto project actually represents and why it has suddenly stepped into the spotlight. BUU is a digital asset launched on the BNB Smart Chain, a network highly popular for fast transactions and low fees, which makes it a breeding ground for hyper-volatile meme coins and community-driven tokens. The project utilizes its official hub at buu-lol to coordinate its ecosystem, which relies heavily on community engagement, internet culture, and viral marketing. Unlike established corporate cryptocurrencies or major layer 1 blockchains, a token like BUU does not function like a traditional company with physical products, quarterly revenue reports, or a CEO presenting to a board of directors. Instead, its core value is driven by liquidity pools, community sentiment, trading volume, and speculative interest. It is in sharp focus right now because after hitting significant trading milestones and seeing hundreds of thousands of dollars in 24-hour trading volume, the price action has turned into an absolute battleground. When a token experiences a sudden double-digit move while sitting at a fraction of a penny, it immediately triggers algorithmic alerts and draws the eyes of retail traders who are hunting for the next token to pull off a massive multiplier. You see people on Twitter and Telegram screaming that this is the bottom, while veteran traders are pointing at the order books and warning that the sell pressure is far from over. This stark contrast between community hype and raw market reality is exactly why we need to dissect the mechanics behind the asset before making any sudden moves. When we transition over to the technical analysis, the chart paints a highly complex and aggressive picture. The overall trend direction for BUU has been facing immense downward pressure, characterized by a series of lower highs and lower lows on the short-term time frames. This negative momentum has triggered multiple technical sell signals as short-term moving averages cross beneath long-term baselines, signaling that the bears are currently firmly in control of the order books. However, as the price hovers around the 0.0001661 mark, we are approaching a critical psychological and historical support zone. This support level represents an area where buyers previously stepped in to defend the asset, creating a temporary floor. If this support floor holds, it could provide the necessary foundation for a short-term relief rally or a consolidation phase. On the flip side, the resistance levels overhead are stacked incredibly thick. Any attempt by the bulls to push the price upward will face immediate selling pressure from traders who bought in at higher prices and are simply looking to break even. Momentum indicators like the relative strength index are flashing deep oversold conditions, which is exactly why some market participants are shouting that the token is undervalued. But in hyper-volatile crypto markets, an asset can remain oversold far longer than retail traders can remain solvent, and the short-term weakness remains a dominant factor until a clear bullish reversal pattern is confirmed by sustained trading volume. If you look closely at the volume bars, you will notice that every minor bounce is met with decreasing participation, which tells us that the broader market is still hesitant to step in and risk capital on a sustained trend reversal just yet. When you look at the broader ratings and market signals available for BU, the outlook from automated analytical tools and volume trackers leans heavily toward caution. In the world of microcap tokens, you do not have traditional Wall Street analysts giving formal buy or sell ratings, but you do have decentralized smart contract scanners, liquidity health scores, and trading consensus metrics. Right now, these technical ratings are firmly pointing toward a sell or strong sell bias due to the breakdown of key market structures. The negative signals are compounding as token distribution charts show large wallet holders, often referred to as whales, slowly taking profits or exit positioning, leaving the remaining retail base to absorb the daily sell pressure. The short-term outlook remains highly defensive because the token lacks a strong independent catalyst to break away from the broader market conditions. When major assets like Bitcoin or Binance Coin experience volatility, smaller altcoins on the BNB chain tend to suffer twice as hard. The flashing red flags on the technical scanners are warning traders that stepping in right now is equivalent to trying to catch a falling knife. Yet the speculative crowd continues to look past these negative signals, hoping that a sudden burst of viral hype will completely rewrite the chart structure overnight. This creates a massive disconnect where technical indicators scream danger, while social sentiment indicators show a hardcore group of believers who refuse to back down, creating a highly unpredictable trading environment where traditional rules of finance are completely thrown out the window. This brings us to the ultimate question that is tearing trading forums apart. Is BU genuinely undervalued at these fractions of a cent, or is it a textbook value trap? The argument for it being undervalued rests entirely on its market capitalization and its previous trading peaks. Proponents argue that because the token has a locked maximum supply of 1 billion coins and a highly active website, any return of trading volume could cause the price to skyrocket due to low liquidity thickness. They see the 12% daily price fluctuations as a sign of life, arguing that the token is simply resting at a deep cyclical bottom before the next leg up. However, the counter-argument for a value trap is incredibly strong. A value trap occurs when an asset looks cheap simply because its price has crashed, but it fails to realize that the underlying demand is fundamentally evaporating. If a project does not continuously innovate or retain the attention of new capital, a low price does not make it a bargain, it just makes it a depreciating asset. Retail traders often look at a price like 0.0001661 and think it cannot possibly go much lower, completely forgetting that a token can always drop another 90% from any level if liquidity is entirely withdrawn from the decentralized exchanges. It is the classic psychological illusion of cheapness that lures people into buying assets that are structurally weak, transforming short-term trades into involuntary long-term investments that bleed out over weeks and months. The downside risks here are massive, and the extreme volatility is precisely why retail traders so frequently get completely trapped in these setups. In the decentralized finance space, microcap tokens suffer from thin liquidity, meaning that even a relatively small sell order from an early investor can cause a massive double-digit percentage drop in a matter of minutes. Retail traders often enter these positions with high leverage or with capital they cannot afford to lose, driven entirely by the fear of missing out. Once the price begins to slip, panic sets in. But because the selling pressure is so intense, the spread widens, and executing a clean exit becomes nearly impossible without taking devastating losses. This creates a psychological trap where traders decide to hold on for dear life, hoping for a recovery that may never come, while the automated sell algorithms and market makers continue to chip away at the remaining value. Furthermore, smart contract risks, potential changes in transfer taxes, or sudden migrations within the liquidity pool add layers of systemic risk that traditional investors never have to worry about, making this a highly dangerous playground for anyone who doesn't understand the inner workings of blockchain order routing.